Hello everyone, good evening, hope we're all doing good. Welcome to another lovely pre-market live stream. I was almost going to say Sunday, but we're on here on Monday, switching things up. So we had a bank holiday today, as many of you guys know, so that's why we're just picking up here on Monday. Bank holidays are days I'm not terribly interested in trading myself, so that's why we're just doing the pre-market look ahead today as if it were a Sunday. So appreciate all you guys joining us. Ahmed, good day, Dylan. Great to be back once again. Awesome to have you, brother. Blue Traders, hello, hello. Denisha, hope everyone's ready to go. Hope you guys are. I sure am. Rich, going to be a great week. Absolutely. Good to have you in here, brother. Tyler, my man, what's going on? Tommy, hello, hello. Awesome. So we got a full house today. A little louder. All right, let me see what I can do for you. Usually I ask if the audio is all good. So if you guys could let me know, one, that you guys are seeing the DXY chart. Hold on one moment. My microphone is not on. One sec. Okay, there we go. So the microphone should be plugged in now. Is the audio better? Okay, awesome. Thank you, Denisha. Thank you, Adari. Thank you. Hello, James. Jose, hello, hello. Desde Madrid. Bienvenidos. Olawale, what's going on, my man? Patel, Joe, hello, hello. Awesome, guys. So we got a full house. Looking forward to it. So I'll go ahead and briefly introduce myself. I know we do have some new people here joining us today. Greetings from Kenya. Awesome. Glad to have you. So again, just going to do a brief introduction. So again, my name is Dylan. I'm a technical analyst who specializes in E-mini S&P and Nasdaq. So I'm a futures trader. I'm not limited to futures, but that's what I specialize in. So in this pre-market look ahead, really what I'm doing is making available how myself and my team of analysts are preparing for the new week ahead. What we're considering, we actually have our newsletter that we send out where we weigh out the economic calendar. We haven't been doing the seasonal data yet. We will pick that up. But the COT reports and earnings reports from companies that we do need to be aware of if you're trading indices. So we do give that in our newsletter. So you do want to sign up for that through our website just to be up to date with everything we're sharing with regards to what's coming up ahead. So we cover that. And then the other thing I'm going to be showing you guys here again is the technical side of things, how I'm doing intermarket analysis and how I'm weighing out the entire market itself for risk on, risk off clarity for whatever it is I'm trading. So again, for currency traders, stock indice traders, stock traders, and foreign exchange traders, we've got you covered. So with that, let's go ahead and get into it. Looking forward to another prosperous week ahead. Ahmed Diaz, really insightful newsletter and COT breakdown for DXY. Thanks for sharing. Be sure to direct that thank you to my man, Tommy. He's the one putting in the work and getting that handled. Great job there, Tommy. A lot of great feedback from that. So weekly chart here for dollar. So we're going to go ahead and just pick up where we left off last week. So remember we were looking at for DXY. No need to go up to the monthly chart because, again, we haven't done anything. So last week, for those of you guys that were here, did we call dollar higher or lower? We called it sideways. So if you look at the previous weekly candlestick, we told you guys we were likely to see what? Market consolidation profile. So there's a couple interesting things I'm going to be sharing here with you guys today that led me to that conclusion. And I'm going to cover some of them again as we go through the price action. So look at where we opened and where we closed on the week. It was basically a doji or an indecisive candle, which is what our analysis was calling for. So again, I want to touch on how we knew this market was going to consolidate. Number one is the timing factor. We're still in January. We just started the new year. So there's going to be a lack of institutional sponsorship because funds are not accumulating long-term positions typically in the first couple weeks of the year. So it's typically going to consolidate as a result of the lack of institutional sponsorship. It's not that their buying and selling pressure isn't moving the market, but it's the fact that IPTA has nowhere to go without institutional sponsorship behind the movements. So one of the things we're going to look at when we go to the lower time frame, I'm going to teach you guys what we were seeing and how we expected that. So again, where we're at in terms of the weekly chart and where I expect us to go, I'm not sure. I want to see a displacement either higher or lower. And then once we get that displacement, we then have targets that we can start to map out and have objectives. But again, right now, there's nothing to do but be patient. And so for the currency traders, I could imagine if you weren't here last week, it's probably pretty rough for you trying to trade currencies. Unless you did take our advice that it was going to consolidate. Again, not financial advice, educational advice. And understand these markets were going to consolidate, and direct your attention to the cross pairs, which are better to trade during dollar consolidations. So dollar-based crosses, probably very difficult last week, but rest assured, we got you covered. So let's drop down into the daily chart. So again, covered last week. Equilibrium from high to low. It's our equilibrium price point. And then I told you guys, because we were at equilibrium, because the economic calendar had no high impact news drivers the first 3 days, and considering the seasonality, which I'm going to touch on towards the end of the stream and show you guys some seasonal charts that were a further confluence for market consolidation profile. As you guys can see, between this low and this high, we just stayed in a range. It's also at equilibrium. So again, time and then price. So we've stayed again in this range. I am not calling a bottom, so I am bearish in the sense that I favor an expansion lower, but either way, I don't care. We just need to see an expansion. So what I'm waiting for on the DXY daily chart is to start seeing displacement higher or lower. I'm not necessarily trading the breakout or a breakout trader, but what that displacement tells me is there's institutional sponsorship back in the marketplace, and that we're going to start running to liquidity and inefficiency on a higher time frame, which is when we're looking to trade. When I'm looking to trade one-sided markets is when we're displacing and running to levels quickly on the higher time frame. And then in the lower time frame, I'm simply doing my intraday trading in alignment with that. So one thing that's important to understand is that if we're in a consolidation and you're looking for continuation patterns, what's that? Your fair value gaps, breakers. Those are going to be extremely ineffective in consolidation marketplace because those are continuation models by nature. So only when the higher time frame is expanding are those continuation expansion models going to be effective. But if you're trying to trade those in a consolidation profile, you'll see that your strike rate will drop drastically. So because I don't prefer to really trade turtle soup or order blocks personally much myself, that is the condition that this type of market profile favors. So because I more like to trade continuation, reversals in terms of breakers, this model, my models is what I'm trying to say, don't perform well in these types of conditions. So it's really important to understand what condition we're trading in and what models is it conducive to. Could I get in here, scalp, trade turtle soup, just trade the range? It's possible, but it's nothing I really want to be doing. So again, you have to understand the conditions because not every market condition is a condition to make profits. Sometimes it's time to just wait for more information. And that's one of the hardest things for newer traders. But again, this is why we have the results we do, because we know when to push it and we know when to step back and wait for more information. So with that, again, we're just in this consolidation. We're in between this inefficiency here and this sell side imbalance, buy side inefficiency, and between this buy side imbalance, sell side inefficiency. So until we get, again, a move higher or lower, I have no interest in this market or other currencies, which is why we're not even going to look at euro or pound, because again, I'm not going to waste my time or yours in markets that are consolidating. And then once we start getting, again, expansion, then we'll get back in and see what opportunities are in front of us. So very important what I just covered there. All right, so let's drop down to the hourly chart. And then last thing on consolidation. Again, if you're trying to trade continuation patterns, you're going to have a lot of difficulty in these types of conditions. And then what we do see in consolidation profiles is looking from the range high to range low, the market just continuously reverts to equilibrium. So every time we get into discount premium, and we just continuously seek and refer back to equilibrium. So again, until we displace out of this range, I have no interest calling this market higher or lower. So moving right along, we're going to go into the bond market, and I'll tell you guys what the bond market's indicating and how it's potentially tipping its hand to where we're going to see the dollar eventually go. Again, not looking at euro or pound. We haven't moved since last week. And again, no interest in these markets. until we start to get movement in the dollar. All right, so on a weekly chart, again, still seeing the same thing as last week. I said we want to monitor how we traded inside this buy side imbalance, sell side inefficiency, or this fair value gap here in purple. So we do see the bodies. We are staying above the midpoint, which again, I'm not looking to really call a bottom in this market. We've been seeing the market move higher, and all we did was retrace into a fair value gap. How we trade there, I told you guys, would be influential, but we're still holding the critical levels inside this discount array nicely. So looking forward, again, we're still in a consolidation on that daily chart. Once we drop down into it, you guys will see again why this isn't a market I'm calling, and it doesn't give me clarity on the dollar index for right now, which is to be expected. It's only January 15th. We're not even into one full month of trading for this year. So, but again, as long as you remain above this inefficiency, longer term, I will be looking for lower prices unless we just completely wash out and close below. So moving right along, looking to keep this one short and sweet. Got some other things to get taken care of ahead of the new week. So again, just in a consolidation profile since last week. So nothing here of interest until we start either displacing higher or lower. I was looking at this as expansion to retracement to then continue higher. But because we've now entered a consolidation, again, I'm just going to wait for more information, because when we are in consolidation profile, that's one of the things that we don't know when they take it out of consolidation until they start displacing or running the range higher or lower. But we're not seeing that yet. So again, it's just a wait for more information type of market condition. So going into the yields, let's go to the weekly chart. So here I have the yield triad, again, the 30, 10, and 5-year yield. Reason I look at this is because it helps give me clarity into what the dollar is going to do. And I covered extensively the macroeconomic analysis of why we have to consider all these assets because of how money flows through the economy. And I did cover that last week. So if you guys do want more insight on why I look at all these assets and what they tell me, I did cover that extensively the previous Sunday. So looking at the weekly chart again, we've been seeing bearishness on yields, of course, as we've been seeing a lower dollar. So what I was interested in monitoring this week was how we traded inside this inefficiency. So we have a fair value gap, or a SIBI, sell side imbalance, buy side inefficiency, across all the yields. And what I wanted to see again was how we traded inside that level. So we did see the market start to sell off. So we did see a bearish week across the yields last week, indicating again, we're just continuing the bearish order flow, seeing lower yields, which if this continues, will eventually pull dollar down with it. But again, I'm not in the business of being a breakout artist, so I don't care what dollar does. Again, I just want to see it expand. This to me is tipping its hand that we're likely going to see expansion lower. But again, until we see that, I don't have any interest in it. But I am using this again as a precursor to what the dollar is likely to do. So if we see continued sell-off across all the yields, we will likely see weakness come into dollar as well, and then further solidify the risk-on bias, which is higher currencies and higher stock indices. So that's it for yields. And again, no reason to be touching on currencies. All right, so we'll go into ES and NQ, and we'll go ahead and take a look at these side by side. Demo baller range consolidation and called for time distortion. Yes, sir. Yes, sir. Awesome. Glad to see some people paying attention, because I'm sure understanding dollar and consolidation paid off significantly, especially for the currency traders. We did call E-mini S&P and Nasdaq higher. Again, just as a continuation of the underlying order flow we've been seeing. And I'll touch on something on the daily chart, the SMT, that told me that the drop lower was just a stop run and not a market structure shift, but I'll touch on that when we get down to it. So weekly chart, again, we explained why it was reasonable for the market to retrace. We ended up hitting midpoint of this inefficiency, and then we saw the market get lift, showing a willingness to rally from a level we'd want to see it rally from. So looking for expansion higher, we have this swing high here on the weekly chart that I expected us to try to dig up into this week. but then the market fell short and just consolidated for the remainder of the week. So moving forward, this is my target. How we get there is something we'll have to look at in the lower time frames, because right now the indices are actually in a consolidation themselves. So still looking for higher prices again. My target would be this high. And then how we trade there is significant moving forward. So do we continue making all-time highs and continue pressing higher into all-time high valuation? Or do we trade above those highs, reject, and start to pull back into the range? That's what I'm going to be monitoring. And how and if we trade above those highs will be helpful when we do so. So that's what I'm going to be monitoring moving forward on E-mini S&P. So same thing with the NQ. I looked at the repricing lower into this inefficiency. And then looking at this previous weekly candle, we had this weekly fair value gap in here. So I have it labeled inversion fair value gap, because this was not a fair value gap we were looking the market to trade up into and sell off. We're looking for the market to get above it and continue expanding higher, because again, we have not been bearish on indices. We expected this retracement just as a continuation of the underlying order flow that we've been seeing. All right, so daily chart for ES. So again, traded lower down into the weekly inefficiency, midpoint, stop run here, clearing out those stops, and then again, impulsively rejecting higher. Again, last week, we looked at this dealing range from low to high, traded down into short-term discount, and then aggressive rally higher, indicating this market is still bullish. So again, I wanted to see them reprice above these relative equal highs. That's what I was expecting them to do going into Thursday, but they ended up just holding it in a range and keeping us sideways. So we're in a consolidation in this market for now, and then that'll be more clearly seen on Nasdaq. And I'll tell you guys what it is I'll be waiting for and what I'm going to be wanting to see moving forward for me to have interest on a higher time frame for stock indices. As for right now, we are in a scalpers market, which again just means surgical strikes, running previous session highs, previous session lows, previous day's high, previous day's lows, and just staying within the range, being surgical in and out. That's the market profile I see us in right now, until again we start to displace on this daily chart. I don't know if it's just me, but the volume is low. I appreciate you bringing that up, Daniel. I'm not sure. Let me get some clarification on that. Abraham, how we looking, brother? Hello, Uzbekistan. Greetings, greetings. Abraham, drop me a message in Discord. How we doing, bro? We good? Sound is good? All right. Lower than usual? Okay, I appreciate you guys letting me know. Thank you. All right, so, all right, we'll go ahead and try this for now. If it's not, just turn it up. We'll go ahead and make sure it's good next time. Okay, so this should be good. And if you guys can't hear me that well, we should be able to make do this week and have everything working good next week. Yeah, Abraham, let's make sure we get that fixed, bro. All right, so daily chart on Nasdaq. Again, we see the market trade down into a short-term discount, and then the market traded higher. So I was not looking at this down close candle here as a breaker. So this to me was nothing. It was just a down close candle. It's the narrative that makes these patterns effective. So same thing here. So a lot of people had this marked as a bearish breaker. We didn't. We weren't looking at this as a means to sell off, and those that are in my community weren't either. We were looking for the market to trade higher. And again, without narrative, your patterns will fail you. So we were not looking again at this like a 2022 pattern model, because it wasn't. The market is bullish. So we were not looking for fair value gap sell off. We were looking for get above the fair value gap, use it as support, trading higher. So here on NQ, again, we traded higher, got above this daily fair value gap in here. And then all we've been doing is bouncing inside this range. So as long as you remain below this inefficiency here in the 1700s and this fair value gap, 17,000s, excuse me, and then this inefficiency below market price, we remain in consolidation. So whenever we are sandwiched almost between two discount and premium arrays, the market's typically going to remain in a consolidation until we start displacing again on that daily chart. So as for right now, we are in a scalper's market for stock indices, again, until we get movement outside of this range. So we are in a consolidation. Again, I favor the buy side. That's what we were looking for last week, higher prices. But as for right now, we're in a consolidation. So I'm just going to wait, keep my cards close to the vest. And then once we start getting movement, I'll let you guys know what it is that we're looking at. High-speed trading, good here. Awesome, thank you. Matthew Davis, can't we expect new highs after 8:30 a.m. news tomorrow morning? I guess we'll just have to see. We'll just have to see. So hourly chart, again, the market is sideways. I got some different tools I'll be teaching you guys today. And this is really mainly directed at my private students, but because you guys are here watching, I guess I'll let you guys be privy to what it is I'm sharing. So we see a consolidation here, Thursday going into Friday. So Friday, we just took short scalp higher and then ended up having to bank partials on the way up. And it did not end up reaching my ultimate draw, which was these equal highs here from CPI. And then these equal highs over here at the original consolidation of this market maker buy model. So we ended up falling just short of that, dropping back down into the range and consolidating. So why did I have no more interest in this market the rest of the day? What factors told me we were likely to consolidate and not deliver low resistance, which is likely what like to trade. Low resistance is something like this, where the market is running and there's hardly any resistance for it to reprice to the levels it's running for. High resistance is something like this, where it's a lot of give and take back and forth. What factors told me this market was going to remain sideways? Heat map. So this is a S&P 500 heat map. So what this tells me is every single stock within the S&P that's heavily weighted within its respective sector. So one of the things we look for in low resistance means, again, the market's expanding and it's having little to no resistance reaching the levels it's looking to get to. So it's a very nice market condition to trade in because there's not a lot of retracements and consolidation. So again, low resistance are the market conditions I like to trade in. For the markets to be low resistance, we have to have what's called market symmetry. We need to have a symmetrical market. Dollar going one direction, indices going in the opposite direction, currency moving in the right direction, and again, all the stocks should also be moving directionally. So that's when your best, highest probability low resistance trades are going to form, when all those factors come into an alignment. So whenever I'm getting to my desk in the morning and I'm wanting to just look at the general feel of the composite of the stocks, I pull up this heat map. I do not like to see Christmas trees. This is a Christmas tree heat map where we see lots of green and lots of red. That means what? There is no symmetry in the stock market. Some stocks are being bid higher, some are being bid lower, but we see that they are not all moving higher or lower, which is what we want to see for low resistance. So the fact that we were seeing indecisiveness, so technology services were green, we saw finance heavy in the red, manufacturing, consumer durables heavy red. So what this is indicating to me is that we do not have a symmetrical market with everything firing on all cylinders, moving in the same direction. So that was another indication that told me we were likely to continue sideways on indices and not break this PD array higher or lower. So other than that, looking at this week, again, from the previous week, told you guys this breaker here, if we were going to trade higher, it would do so from here, and we would not get breaker if we were to remain bullish on the Nasdaq. And then what do you know, that ended up being our low of week, and then seeing an expansion higher, Thursday high of week, and then consolidating again into the close. So again, just based off what we're seeing, I favor this market going higher, but when it will deliver that, that is something that is beyond the scope of my understanding right now. So I have to do what everybody else is doing, waiting for more information, waiting for the market to show a one-sided market condition that I'm willing to trade in. And presently, we do not have that. So other than that, let me go ahead and check the comments, and then I'll touch on the last thing. I think we'll get going early here today. QnA Trades, hit the like button, guys. Yes, please do. If you guys are getting value, learning something new, be sure to help a brother out and hit that like button. Cobra, that would be a great question for Top Step support, sir. All right, getting a couple questions from Oil Math. Humble Trades, good evening. All right, so I was getting asked for a couple people about crude oil, and then I'll just explain why I'm not touching on crude oil. Again, I don't touch markets when they're like this. As you guys know, last year we called this rip higher all the way from down here. So I call markets before they start expanding, but I do not trade them while they're consolidating. Because again, if I were to call these markets in these conditions, my results would just look like everybody else's. And I'm not here to do that. So no interest in this market for me right now. And that's why. Where does one find the heat map? So here's how I pull it up. So you just hit new tab, and then I open up Heatmap. So hopefully that clarifies that for you, Jonathan. And then last thing I had to touch on here, ICT trading concepts. Good to see you, bro. Appreciate you joining us, Jonathan. Glad to have you, brother. All right, so last thing I had to touch on here is, I remember I was going to tell you guys, I was going to share with you guys, excuse me, how it was that I was favoring consolidation profile and what we're looking at in terms of seasonal tendencies. So let's go ahead and start here with US dollar. So here we're looking at the seasonal trend of the US dollar index over 15 years. So we have 15 years of data behind us, and we have January here. So what is the seasonal trend for dollar in the month of January? It's sideways. It's consolidated with little flurries of movement, but I'm not looking to trade little flurries of movement. I want big ranges running to higher time frame levels of liquidity. And if I don't have that, if it's not one-sided and obvious, I wait for more information and wait for that type of condition to materialize. So again, sideways for January. E-mini S&P, same thing. So 15-year seasonal trend of the E-mini S&P. So we see here January going into February is sloppy. Second week of February is when we start to get movement. We typically price in a seasonal low in March to then rally into the summer months. So again, just sharing this with you guys as to additional tools I'm using to confirm what it is I'm calling. And again, I'm starting to bring that to the surface so that you guys can see what it is I'm doing behind all these calls I've been making available to you guys for the past almost year and a month. So that's what we're looking at in terms of the seasonals. No interest until we get into spring months when we really start to see movement. And then obviously the fall is just lovely for indices. So we could be staying in a small range up until February. And again, that's fine because I can scalp in and out. But again, you have to know what market condition you're trading in, not overstay your welcome if you're trading a consolidation profile. So with that, might take a few questions, but outside of that, that's all I had to cover today. So again, wanted to keep this one short and sweet. Does the signal service include indices? The signal service will be indices. Yeah, good question. So signals will be indices with swing trading as well, potentially in the currencies, which we'll do again if we see that opportunity. But for right now, currencies are abysmal. I wouldn't touch this with the 10-foot pole. And same thing for euro. Just atrocious, sloppy market structure. Have no interest in touching a market or even risking money in this, or even calling a market like this. So no interest in the currencies for right now until we start moving. And then when we do start moving, I'm sure it'll just open up and be just lovely. But for right now, no interest. Matthew Davis, check Discord, please. Yeah, let me go and check that out for you. Signal service start in February. Yes. February, we will roll out signals. Yeah, Matthew, what'd you ask in the Discord? Can you touch on aligning time for trading this week with the economic calendar? So you want to have your high impact news drivers and everything we really covered in the what every trader needs to know blog post that we sent out. So the days where there's high impact news drivers, they should be great and they should provide volatility. But again, you need to understand that higher time frame. So if that higher time frame isn't clear, there may be volatility injections, but that doesn't necessarily mean we're going to break the range. We're more likely to expand out of this range during a high impact news driver, but which one we're going to do it out of, I'm not sure. So I'm just going to have to see how we're trading at those times. And then again, once we leave this range and start getting more clarity, then I'll be able to give you guys more forward visibility into the future. But above these highs here on Nasdaq and E-mini S&P, my crystal ball goes dark. And then I have to submit myself to time, waiting for more information, waiting for that next obvious price run to manifest itself. And sometimes that takes a few days. Sometimes it takes a week, and that's fine. I just submit myself to that and do things outside of trading. That's why it's very important to, again, make sure this isn't your life, because if it is, again, there's times when it's not conducive to profit making. So that's when you have to shift your mindset and think more about capital preservation than making money, which is where we're at right now. But then once we get the movement, as you guys know, we'll be all over it. Sal Wartsy, big up Dylan. Hey Sal, glad you joined us, brother. All right, guys. So I think that's going to be it for today. Hopefully that answered your question, Matthew. Again, we did cover the economic calendar, how we'd be looking at that. And again, just around the high impact news drivers, do what it is I'm teaching you to look for, and it'll be there. Trust me. All right. So I think we're all good. I think I got all the member questions. Don't want any of the members to get left behind. Humble Trades, good evening. Good evening. Denisha, thanks for the stream, Dylan. Don't forget to hit the like before you go. Be safe, everyone. Yes, do please hit the like button. Keeps me motivated to keep doing this for you guys here on YouTube instead of just doing it on a Zoom call with my private community or something. So give me that thumbs up. Helps me out. And again, keeps me motivated to keep doing this for you all. Denisha, thank you very much. Olawale, thank you, Dylan. Absolutely. Pleasure is all mine, my man. All right, you guys. Well, I think that's it for today. So I do wish you guys a great rest of your week and good luck and good trading, everyone.